Hey everyone, Sam from How to Fire here, and in this video we're going to discuss how to use our FIRE calculator. When learning about financial independence and early retirement, a common question that's asked is when can I retire, and also how early can I retire? Now the most important factor in answering these questions is your savings rate. The higher your savings rate is, the sooner you can reach financial independence based on your current spending. Now with that, let's get started with looking at the FIRE calculator. Now, a key note here is that when you're able to draw exceeds your desired income, that's when you become financially independent and reach financial freedom. Now, there's two ways that you can set up this calculator. Now, you can just calculate for yourself, or you can also click Add Person here if you'd like to include another person in your calculation. For the sake of this one, we're just going to base it off one person. Now, the first entry here, you're going to type in your current annual income. Next, you're going to type in your annual savings percentage. Now, this is going to be a pre-tax and tax-deferred assumption. Now, to come up with this number, you're just going to ask yourself, how much are you investing in your retirement accounts? The next one is going to be employer match. And here, you'll put in your current portfolio amount in dollars. And then the next one here is going to be your estimated percent of pay increase each year. Moving on to the next row, additional data. And a lot of this data here in this row is going to be automatically inputted for you, but you can go ahead and change it. The annual return, it's set at 8.5%. Now you can lower that or increase it based on what your estimations are. The inflation rate is currently set to 2.5%. Also, you can change it. And then desired withdrawal rate is really important. So here, you're going to enter your desired withdrawal rate. Typically, lean FI is roughly 5%, FI roughly 4%, and fat FI roughly 3%. It doesn't take into consideration any annuity that you may have, or pension, real estate, defined benefits, or Social Security benefits. Essentially with this one, the lower your withdrawal rate, the more conservative you're being. Now the last entry here is the percent of current income needed in retirement. Now you just want to make sure that you're able to cover all of your necessary living expenses. Once you have all of those entries put in, you can just click calculate. And now we're going to take a look at these three boxes here. The first one is going to be your savings rate, dependent upon the information that you inputted. Next one is going to be your FI target amount. Now this is the amount that you want to have in your retirement accounts when you become financially independent and retire. And this one is years until FI, so the number of years that you'll take to reach this FI target amount. Scrolling down, we have this savings over time graph. There's three different lines here. The first one being your out-of-pocket expenses or savings. And then we have the total interest on this blue line and the total value in the green line. And these numbers here correspond to that. So the portfolio value, which is the green line, is roughly 2.1 million. But it encompasses your contributions and interest earned. So your contributions, which is this out-of-pocket red line, is 517,000 roughly. And then the interest earned on that is this blue line, which is roughly 1.4 million. Scrolling down a bit further, we have this yearly breakdown table. Here you'll notice that there's years 0 through 22, and that corresponds up here to this years until FI. Going across the top, you have your income each year, the amount that you save each year, the amount that your employer matches each year, and then the combined savings amount. It also calculates your portfolio value as the years go on, any interest that's earned on that, and then the total interest over the years. Now this is between the desired income, able to draw, and difference. This is something that's pretty important. So going back up here, remember when I said when you're able to draw exceeds your desired income, you are financially independent and have achieved financial freedom. So you'll notice that you're able to draw does not exceed your desired income until you reach that FI time frame, which is 22 years. This difference is just the amount between the desired income and able to draw. Now, if you want to share your results with friends and family, all you have to do is copy this share your results section here, and it'll take that person right to the calculations that you already did. One other thing I want to bring up here is that FIRE is very personal. So your number is going to be different from the next person's, and it could take one person 10 years to get there, could take another person 20. So each person's situation is very different, and all of that should be considered when you're putting together this calculation. Can be a little bit difficult, a little bit stressful, but there are a lot of resources out there that you can use to get started. We have resources over on our blog, How to Fire, and I'm going to link to all of those resources in the description of this video. For instance, we have a fire guide that you can take a look at. It has 12 chapters of every step of your fire journey of things that you can implement. And then we also have this ebook. Now, this is what I recommend that you get started with. It's How to Prepare for Your Fire Journey, 10 Tips for Starting Off Strong. You can download this right from the link in the description, or you can go to the Fire Calc and input your information here and download it to your computer. So those are the resources that I recommend you get started with. They'll be linked in the description of the video. And if you want to share your results, go ahead and do that. You can also share the calculator here on the side to Facebook, Twitter, Pinterest, or even email it. And if you want to hear more about financial independence and early retirement and our journey to reaching FIRE, go ahead and subscribe to this video so you get notifications whenever we come out with a new one. Thanks, everyone.